Who doesn't love a little one-stop shopping? Picking up everything on your wish list all at once isn't just convenient. It also leaves you with more of what matters most: time. Well, think of multi-leg order tickets on WebBroker as a twist on one-stop shopping. Fast, simple, and convenient options action. Plus, they're especially useful for carrying out option strategies, as we'll see in just a moment. Here's how they work. A multi-leg order ticket allows a trader to place two trades at the same time. It can be a pair of US options or an option plus a US stock or ETF. Both legs are tied together as a single trade, and both will be filled at the same time if the order price is met. So, rather than creating two separate orders, traders can use multi-leg order tickets to execute an option strategy in just a few clicks. This ensures they get the exact prices they anticipated at the time of the order. And it minimizes some of the potential risks that a delay between orders can create. Let's walk through how to put together a multi-leg order ticket for a vertical spread trade on WebBroker. That involves buying an option and selling another at a higher strike price, with both either calls or puts. For our example, we'll use a pair of calls, making this a bull call spread. To begin, navigate to the Order Entry tab in the top right of the Quick Launch menu. Select the account you'd like to use, and then click on the Strategies tab. You'll see Multi-Leg on the far right. Notice that the ticket defaults to option plus option, which is what you want. Next, plug in the name or ticker symbol of the underlying company you'd like for the option. You'll see its quote information appear on the right side for easy reference. Then, click on the green Option Chain button to call up the underlying security's option chain. Find one you like to buy and then click its Ask Price. Its details like expiry date, strike price, and contract type will automatically be entered into the first leg of the ticket. Alternatively, you may also enter each of the details using the drop menus. Make sure that Buy to Open is selected under the Action menu and enter the number of contracts you'd like to purchase. One contract typically delivers 100 shares of the underlying. Now repeat this process for the second leg of the trade. Click on the green Option Chain button, track down an option you'd like to sell, and choose it from the list by hitting the bid price. Remember, the second leg option needs to be at a higher strike price than the first to complete a bull call spread. Once you've found your match, its quote data will appear on the right-hand side. Now, head over to the Action menu and select Sell to Open Covered. Then, plug in the number of contracts you'd like to write. For a bull call spread, you're buying and selling the same number of contracts in each leg. When you do, you'll see the mid price and natural prices populate on the right just below the second leg's quote details for reference. The mid price represents the trade's median between combined bid and ask prices. And the natural price is the lowest price the market is currently offering when you buy at the ask and sell at the bid for each leg. So, the mid and natural prices reflect the amount you'll pay to buy the first call and the premium you'll receive to sell the second call. Some traders try to fill the order at a better price than the natural. This practice is called price discovery. However, the order may not be filled until a match can be found at the lower price. Under the Price menu, choose Net Debit since you're paying for the trade, and plug in the price you want to fill the order. And lastly, select how long you'd like the order to remain active. In this example, we'll stick with Good Till Day. Then, click the green Preview Order button to take one last look at the order details before sending it through. You can check in on your order by clicking the Order Status button in the Quick Launch menu. And there you have it, a bull call spread in just a few easy steps. You can also use this ticket to place other types of option spreads. Creating a multi-leg order ticket for an option and stock trade is a similar process, with a few minor differences. So let's look at how to get one going for a covered call. That involves buying a stock and then writing a call against them. The first step is to navigate to a fresh multi-leg order ticket. Then, above the first leg section, click on the drop-down menu to change the default from options to stocks and ETFs. This will set up the first leg of the order as a stock or ETF purchase, which you'll write the call against. Remember, only US stocks and ETFs are eligible for multi-leg orders. Next, punch in the company name or ticker symbol you'd like to trade. You'll see its quote information appear on the right side for easy reference. From there, select Buy from the Action menu and enter the number of shares you'd like to purchase. Now it's time to fill out that second leg of the trade. Click on the green Option Chain button to call up the underlying option chain. Find one you like to sell and then click its bid price. All the relevant details will be entered for you in the second leg of the ticket. Next, ensure Sell to Open Covered is selected under the Action menu, and then enter the number of contracts you'd like to write. One contract typically represents 100 shares deliverable. You'll see the quote data like the bid and ask price and the open interest appear on the right-hand side. And just below it, in the third section, the mid and natural prices for the trade. Since you're putting together a covered call, the mid and natural prices reflect the amount you'll pay to buy the shares, and the premium you'll receive to sell the call. Now, under the Price menu, choose Net Debit, and specify the price you want to fill the order. And lastly, select how long you'd like the order to remain in effect. Again, we'll stick with Good Till Day. Then, click the green Preview Order button to give everything a once-over before finalizing the order. Like we said, not too different from our earlier example. Of course, multi-leg order tickets can be useful for closing out covered calls and spread trades too. For that, just choose the opposite actions on each leg that we discussed here. And if you ever need help filling out an order, don't hesitate to reach out to our support staff for assistance. Or check out one of our masterclasses and get guided learning from our team of instructors.